Good day, guys. So this is Barbiedollfx Academy, and today we want to do a top-down analysis. I want to explain the top-down analysis on USD I want to show you my style, the way I trade. Although I do my main analysis on TradingView, but why I'm using MT5 is for it to be easier for everyone to see that it's not about using a big screen. Is about understanding what is happening, because we are trading pure price action and I'm a hybrid pure price action. If you understand the meaning of hybrid, I don't use one particular confluence to get my bias for the week or for the month. So last week there was no NFP, and at the same time, actually we did not see much move last on Friday. So there was no much momentum on Friday. So today I'm going to run the top-down analysis and how I do my analysis. So let's get to it. So on the monthly time frame, we can all see that price has been on a downtrend for like 11 months. 11 months now. From the beginning of the year, when price took out this high, the last December, the last candle of 2024, price have been moving down, and I think I had a video about it that USD is going to make a low, a very deep low. But although it's not my pair, I didn't follow through. But it correlates with DXY too. So what I always do is I capitalize on using the previous candle, the candle that closes before the moving candle, because I believe that the liquidities I focused on are the external liquidities, which is the previous monthly high, the previous monthly low, the previous weekly high, the previous weekly low, the previous daily high, the previous daily low, and sometimes we use the swing highs and the swing lows of 4-hour time frame. And another liquidity that I put so much interest on is when we have equal lows or equal highs. So each swing low, swing high, equal low, previous monthly highs, previous monthly low, they are the only liquidity I recognize outside internal liquidities. These things that I call now, these ones that I call now, are external liquidities. So when we come to internal liquidities, that's when you now start hearing fair value gap, FVG, inverse fair value gap, order block, breaker block. That's when you now hear those ones. Those ones are called internal liquidities, and we cannot leave them out. If you're listening to this video and you're hearing all this for the first time, you can research about that. Although I have some write-ups and some videos on that on my page, so you can read it out, read those out, and you understand it, because those are the things that makes market structure. So let's dive to it. So now I only use horizontal line to indicate those. I don't need box to indicate it. I can use box for another block. Yeah, you can either use block for another block for a fair value gap, for breaker block, I can use it. But for my external liquidities, because I know that those are the highest, in fact the strongest valid magnet points in forex trading, no matter how you see it. See those highs and lows, they are the strongest I've ever seen. So let's go on how I do my top-down analysis once again. If I get my horizontal line, I'll mark, look at the previous high here. This is the candle that closes before this month of November. This is October candle. So I'll mark the high. I always include the week. Oh. I always include the week. And when I include the week, I know because the week on the higher time frame says a lot on price. So I don't neglect it. I always mark it out. Then I'll mark the low of that same candle. This is the monthly time frame. I'll now go down to the weekly time frame. Now I've already gotten the context of the monthly, and it's the same thing as the weekly time frame. You can see that this weekly time frame price has been on a downtrend, and for some weeks now it has been ranging. It's been ranging. This is structure. You see that market has been making higher high, higher lows, higher high, sorry, higher sorry, after this high, market has been making some lows. You see it, see the low, see the lower high, see the low, see the lower high, see the low, see the lower high. Attacking this volume imbalance here. So see the lower high, see the low, see the lower high, see the low. This one breaks here. It broke this place. See the lower high, see this one is yet to give us another low until this low here is broken. That's when we can now say, okay, we'll get another higher high. This low is yet to be broken. So this is the low that is yet to be broken. So now it's as simple as that. We have gotten the context of the higher time frame, the monthly and the weekly time frame. So what else can we do? Now the week just closed. You see that I'm doing this analysis during the weekend. I'm doing it during the weekend against Monday. So you can see this today. You can see that look at how the price closed. Let me change the color so that I can be able to differentiate the weekly from the monthly. So you see that last 2 weeks price, this week that just closed, price broke the previous week, but it did not close below. It just closed almost at the week of last week, and this last week close is giving us a name, a candlestick name. You see the exhaustion after breaking this low, because the previous month, look at the previous month high, price too broke the previous month's high and rejected it and closed below the monthly high, which is number one clue for a reversal, that this is showing exhaustion, that this particular push to the upside might be just forming a lower high before the main downtrend. Maybe we might be seeing another new low here. So what I should do is that I've seen this candle close below here, and this candle is showing me a rejection candle. That's number one clue. That's why I'm a hybrid pure price action trader, because now I've combined like 3 strategies. I'm using liquidity, I'm using candlesticks confirmation. Candlestick confirmation on the weekly is showing that there's a rejection on the monthly and the weekly time frame. So that's the number one bias for us to start looking for. We are not going to marry this trend because we know that we are not pushing the price. Price pushes, it shows us what it wants to do and we follow through. So on the daily time frame, now we have gotten the text on the weekly time frame. So on the daily time frame, you can see that after that exhaustion, you see here, look at the pin bar here. This looks like a dodgy candle. After the indecision, price drop, taking out these lows. Then on Friday, price took out the lows of Friday and closed below it. So now Look at where we are. We are at this place here. So this is where we are. This is where we are. This is our range for the day, the last day. This is the previous daily highs and previous daily low. So now we have marked out our external liquidities. You can adjust if you did not get it right. So you can adjust. This is the last low. Remember that this is the last swing low of the year. Let me just say of the year for now. So now we have a context. Here market is bearish, fully bearish. If you're not looking for any other thing, it's bearish, yes. Even if it's bearish, you cannot just marry that bearish pattern. So when we go down to our focus time frame, which is the 1 hour time frame, you can see the way market broke Thursday's low. Look at the Thursday high. Look at the Thursday's low. And you can see from here that as market open, market rallies up after that. Then now during New York session, starts pushing down and broke this low. As it broke this low, it broke the weekly low too and retracted back inside and giving us a fair value gap, which you're seeing how many fair value gap here. There's a breaker block here. There's a fair value gap here. There's another tiny fair value gap here. And there's an order block here. So you now have a focus. So what do you have here? You have a focus here. The focus you're having here means that as price is here now, you have here, you have here, you have here. So these are your turning points. These are your turning points for the market because it's still in a range, but unless price holds above that level, it could still be a liquidity grab before continuation down. If price closes below the previous weekly high, it is now a confirmed failed breakout. If price later push up and close below this previous weekly high that was broken, and maybe price is still rallying around it, maybe we can now see a further downward movement towards this particular previous weekly low. So now this is our focus. This is where we are watching the price, what the price can do. So as we are watching it, we will not leave other things unturned. We need to have it in mind that as the previous weekly high has been broken and there's a rejection, price is showing a rejection around that place, we might expect a continuation back, maybe towards the previous swing high, or maybe if the high gets cleared, we can now have a downward move. Or if price breaks below, let me say 80.30, let me use this, I think here, okay, 83.1. Okay, let's round it. Let's use a round number here. Let's use a round number here. Because you know I work with round number, but I don't use round number. Well, let me use the round number. Instead of using 313, okay, let me change the color. So now instead of saying okay, maybe I want to use this last low here, which was the previous daily low. I don't want to use it because this is the previous daily low. I still need it to be broken. So now this is the point for me. If I see a break, let me use my arrow, sorry. So let me get another arrow, it's giving me issues. So If I see this place broken and I got a retest around inside this range, I can now sell down towards the previous weekly low, or I can get another target around that area too. Maybe possibly um 7, 8, 90. Maybe the previous daily demand, or I can say, okay, let me round it 7, 9, 60. Okay, my first take profit can be 7, 9, 60. You know why I'm targeting this 7, 9, 60? Okay, let me adjust it. Maybe I can target this 7, 9, 60. So I can target this as my first target. Then I can even go as low as this monthly demand zone. You know, is a monthly structure. Let me say 7, 8, 90. Okay, let me use 7, 8, 90 so that if I'm clearing the chart, it's 7, 8, 90, right? So these are the two places I might 7, 8, 90. So instead of me to use, oh sorry, instead of me to use this particular swing low, I would like price to get below for me to get an invalidation price. And you know that this previous monthly high is a magnet point. This particular one is a magnet point. Price can retrace. That's why I'm using this round figure. I think I've missed this. Remember, it's 7, 9, 30. 7, 9, 6, 30. Is that what I got? Okay, fine. It's okay. It's okay. It's not that much. At least small accounts can take their targets here and take the TP2 here, and it might be okay if you can extend or break even, put stop loss to profit and ride it through. So this is how I set my take profit. It's not that hard. I always use my previous weekly or monthly, or I can now round it in between, depending. Maybe if I'm not getting my 3RR or more than, I always like targeting 3RR so that I'll be able to know that yes, once I take this TP1, either I break even or I put stop loss at because once it gets here, before it moves, it will retrace back before going downstairs again. Remember, price does not move in a straight line. It moves lower low, lower high, lower low, lower high. So that's how it goes. So that's structure for you. And as for the bullish buyers, the the only thing I would say is, if price rejects this 80, 30, maybe if price close above, or maybe I see price moving towards the upside, I might now rethink, I might now do another um, analysis on this thing. I can clear off my chart and make sure I understand what's going on before taking any other trade. So I have to be very careful. Have to be very, very careful, because I need to mark out so many things on the chart before knowing what to do. Because if price keeps staying above 80-30 or 300 zone, 80-30 zone on Monday and start showing bullish rejections, then we can expect a continuation to 81238, which is the previous swing high, and possibly, okay, let me show you 81380. Okay, let me just mark it to 81380. You can still have 81380 as my target. So you know the market is still neutral. I can still target that. I can still target 81238 or something. Let me just leave it at that, or let me just see that once I see it 81238, or I can round it to 81238. Okay, let me mark it too so that you guys will have 81238. 81238. I should round it to 81240. Okay, that's cool. So, and you see that this 81240 is the previous high. In fact, the high of last week. That was the high of last week, and it's already protected. You see the way it matches. So now I have a bias. If I see price rallying above this 80300, and maybe it breaks this previous daily high, I can take the trade in between here if it gives me a rejection candle here. Remember that this is the previous monthly high. This is the previous monthly high. This is the red one is the previous weekly high, which was broken and is retracting back inside. This is the previous monthly high, and price is still staying below the previous monthly high. So the bearish side is what I'm still opting for, which if price eventually breaks this 8300, you can now ride to this target. You can even have 4 targets if you have a large account. But if you don't have a large account, please, once the price gets to this, it's end of the year. Once price gets to here, or at least this previous weekly low, previous low here, you can take your profit, and you should be done for the day. So you don't need to stress much. You don't need to stress yourself much on this. So let's keep hoping that market to give us what we want it to give us, because look at the recent low. You know that market have not closed properly. If market opens today being Sunday, market can decide to give us another low or might stay inside. That's why I did not mark this particular week that closed. I still mark last week's highs and lows, and this is the where I'm actually basing it, because market has closed. But once market opens, I will not take this my red line and place it above here, this previous week's high, which is still protected. That's why I'm using it as a target if eventually price starts retracting back upwards. So if I can now mark it and mark the low, if there's a new low that is formed, can now shift this particular one to here. That's why I'm not using it as target yet. I'm using before it as target. So let's be let's there's another thing I want to talk about, the stop loss, how to place your stop loss. Now, if the sell buyers, maybe after there's a clear break and retest on the 80-30 zone on this 1 hour time frame, and price close below this 80-30, then the stop loss above should be the previous structure. Remember, I will still do, it's like I will do a separate video on this stop loss placing. Should be above previous structure. If we test high, maybe there's a retest on this 8512, which is this weekly candle, this weekly previous high. You can do the round figure. Okay, let's say 8050. Let me not include the 12. Then add like 15 pips to it, because you know that the institutions, they target um round numbers. They target, so don't use round numbers for your stop loss. I don't know how I'm going to say. I'm going to write this. Don't use round numbers as your target. Add 15 pips to it. If it's 8050, like this particular one here, for the sell, I'm talking about the sell. Add like 15 pips. Like, okay, let's say the stop loss will be 8050. The stop loss should be 80-50 at most. The stop loss should be 80 so that you give the market a breathing space. Let me see if I can get the stop loss. Let me mark it. Let me get the stop loss for this sell. 80-50. So you can say, okay, the stop loss can be 80-50. 80-50. Here, you see that is not much. And make sure you're using 1 hour to place. I know that our entry comes from 5 minutes or 15 minutes. But please, your stop loss should not be on 5 minutes or or 15 minutes. Please, your stop loss should not be on 5 minutes or 15 minutes. Use the higher your focus time frame for your stop loss. Use your focus time frame on your before your stop loss, please. Don't use so once here is broken, and just remember that once if this 80-50, or let me say if this 80-50 is broken, once market takes you out from here, know that this sell setup is invalidated for that moment. It's invalidated for that moment. You understand? It's actually invalidated for that moment. So let's be careful. If you watch this video and you still want to ask me some question, you can do that. I'm always free to answer any question. Then for the okay, let's say that 80-50, I said you should add 15 pips. So that your let me say if you're adding 15 pips, so it's 80-50 should be 80-65. 80-65. Wow, yeah, it's okay. 80-65. You see that if price gets to this place and breaks, maybe if market open, price gets to this 86.50 now that I marked now as stop loss and rejected it and still break here, there's a break of structure. You've gotten two things, a rejection, a break of structure, and your entry. See how easy it is? You have gotten a stop loss and there's a break of structure here. Once there's a break, even if price is rallying around, if it takes you out from here, this particular whole sell setup is invalidated. It's invalidated. The same thing with the buy setup that we said. If we see price rallying around above this, even this 8650, if price breaks this previous daily high and price starts rallying around and is giving you a bullish confirmation, you do the same thing to get the stop loss. You do the same thing too. So once you see structure above that 80-50 or maybe 80-848, which is the previous daily, then your stop loss should be, let me say, 80-20, or it just be around 8005, which is too high. So you need to be very, very careful on how you do it, because the last structure for the bullish side have not been created. It's everything around here now is showing bearish sign. So you have to be careful. So even if you want to get a bearish stop loss, you have to be very, very apt on your entry, depending on where your entry is, and make sure that the structure below it will not affect the trade, because everything around here now is only this 80-300 now, or 30, is what is going to invalidate all setups, both the bullish and the bearish. Maybe if you take your trade around this 80-50, around this 80-50, 512, which is the previous weekly high, and maybe you take an entry here, your stop loss should now be below, let me say, 8005. Let me get it. Although I'm not supposed to fill this place with lines, but I'm just giving an example, but I will still do another video on this stop loss. Let me say this 8005, although is much, because the entry is what will determine this, because this is the last structure here. This is the last structure below this 1803, because if this did not hold, maybe you enter the buy setup around this 8300, then your stop loss can be here, your targets can be this and this. And if you enter this 80512, your stop loss can still be here, but you adjust it. Just look at your, use your calculator, adjust, make sure it's always below structure. Make sure it's always below structure. This is the last structure. After the break of here, this is the last structure that I'm push up. So be very careful how you place your stop, so that you not be stopped out and get confused. Your confidence will just drop. So be careful. So if there's a buy setup for us to ride to this price, so make sure that your entry, maybe after breaking, you know that if price breaks this previous daily high, it must surely give you a higher low. Once it gives you a higher low, maybe it falls here, that's when you enter. It's not when it breaks here, you now jump in. No, you don't just jump in. Even if it breaks this low, you don't jump in. You wait for second tap. There's this thing I taught my students. Second tap. When price breaks, it always breaks with a high momentum. If it breaks down with a high momentum, there's a possibility that no matter how it goes low, it will come back and retest. That retest is where your entry is coming from. That retest, you must always be patient. Once you see the break, it's the first sign. It's not an entry command. It's not an entry command. You just wait for it to give you a retest, bounce back inside. Once it bounces back inside, it will give you a clear entry, give you another rejection towards the downside, maybe an engulfing candle, a pin bar, or all those other candlestick confirmation. You can use candlestick confirmation. You can still use your Fibonacci to get an entry. You can use Fibonacci retracement to get an entry. But you must wait for that break. Once it breaks, you now be patient. The price will go back, break again, go back. It is the second tap. That second tap will even be giving you M pattern. To be giving you M pattern. So you have to be very careful on your entry. Once the previous daily high or low is broken, don't rush in. Allow it to close below, then allow price to get back inside. You might see it. Sometimes it takes a day to even retest. Sometimes markets will take a day. Look at what happened to AUDJPY. You don't even know what's happening there. So we are still being patient for it to finish the tapping, finish the retesting. So there's this thing I call second tap. Once price breaks first, it goes back inside, breaks again, goes back inside, giving us that M pattern. That's why you see people, they will just mark M. They will not explain. I'm trying to explain. I'm even tired of explaining this stuff. Your entry should not be something that you are anxious of. You have to relax. You have to have peace. Make peace with the chart. Love the chart. Embrace it. And see the chart working for you. Okay? So please do have a nice day. I know this video is getting too long. Oh my God. Alright. Take care, everyone. If you have a question, just chat me up. Give me a DM. And I'm always ready to answer. Have a nice day. Bye.